Safemoon was created on March 10th of 2021. The whole entire concept that Safemoon was created around was to actually hold Safemoon as an asset long-term rather than selling it or trading it. And the way that this concept was enforced was by creating something called a seller's fee. So the seller's fee is exactly what it sounds like. Every time you want to trade Safemoon, you have to pay a 10% fee. So out of this breakdown, 5% of it actually goes towards its existing holders and redistributed to them as an incentive to keep holding. And the other 5% goes towards a liquidity pool made out of Binance and also Safemoon tokens. Hey guys, it's Team Wealth here and welcome back to my channel, or if you're new, make sure to subscribe as I post finance videos every single week, and let's get right into it. So before that, we were actually talking about a liquidity pool. So what is that? I could make a whole video just explaining it, but just to dumb it down a little bit and sum up, a liquidity pool is a bunch of cryptocurrency funds deposited into a smart contract by liquidity providers. Most liquidity pools use an algorithm called AMM, or automated market makers. So instead of a standard peer-to-peer trade from one seller to another, it's actually peer-to-contract. So it's almost like you're trading with a robot, because the price you get from your coins and the coins you sell is actually determined by an algorithm, which completely eliminates the need for a counterparty or third party. Okay, back to Safemoon 101. So when Safemoon launched, they actually created 1 quadrillion tokens. And yes, that is 15 zeros. But in order to keep the value of this token pretty high, they had to generate scarcity. This all follows the basic supply and demand laws, which basically means that if you have lower supply, then you have higher demand. So what they did was every single time someone sells a coin, they actually burn a whole bunch of them. This concept is to promote diamond hands and to also keep holders steady. In fact, a lot of investors were very drawn to the concept because it increased 20,000% in value once it launched. So is Safemoon really safe? Well, there are a few issues with it. Number one, a third-party audit actually found out there were issues with the liquidity pool. These issues, to this day, still have not been fixed. Secondly, with the intention of holding Safemoon long-term, there's actually no intrinsic value with it. Even though Safemoon says that they keep burning coins in order to have the price and value go up, the value has not actually went up. In fact, in the past couple of months, Safemoon's value has been going down. And lastly, is Safemoon a form of cryptocurrency? I'm gonna say it, no way. Because every time you want to pay using Safemoon, you're going to have to pay a seller's fee of 10%. That's like me going to Chipotle. I always use this example of Chipotle, but that's like me going to Chipotle, buying a burrito bowl of $10, but having to pay an extra $1, so $11 total, because of the seller's fee. And it's not like the creators can get rid of it either, because the seller's fee is a fundamental, integral part of the concept. So should you invest in Safemoon? While it does have its regular ups and downs, as any cryptocurrency or really any investment does, Safemoon is a little bit more volatile and a little bit more excessive. If you wanted to look forward to things like short-term gains, then this is definitely the cryptocurrency for you, as long as you know how to ride the trends and also how to time the markets, and you can look at different patterns. But generally speaking, the average person does not have the skill, time, nor ability to be able to time the market for any cryptocurrency. So personally speaking, I myself would not invest in it, as I think it doesn't have any intrinsic value. And the only real thing that is hyping it up is the people and the concept itself. That is the only thing that is going for it. And if you want a nice long-term investment, then this is not necessarily the cryptocurrency for you, because I don't see it going anywhere in the future. And as for the reason why it has no intrinsic value, like what I talked about before, you're not able to use it as a currency. It really isn't backed up by anything. Even with the stock market, maybe it's backed by a company. And for Ethereum, it has smart contracts going for it. But as for Safemoon, the only really big thing that's going for it is the fact that it encourages investors to hold on to it long term. But right now, what a lot of investors doing are they're selling it for short-term gains, which is kind of contradictory against the whole concept itself. So really, if Safemoon wants to get somewhere, it's got to make some big changes and implement some new features. So that's pretty much it. If you guys enjoyed this video, make sure to give it a big thumbs up. And if you want to learn more, make sure to subscribe, as I post educational finance content every single week. And I'll catch you guys next time.